Today, stocks came crashing lower and the S&P 500 finally hit the 38% retracement. However, could the Fed skip the next interest rate decision at a time when the government is days away from a shutdown? Now, we come over look at how the indices fared across the board today. The Dow was down 173 points. NASDAQ down 113 points, with the S&P 500 down 33 points. Russell 2000 down 2.29. When we come over look at advancing issues versus declining, we had 70.6% of issues declining on the day. So overwhelmingly, the stocks were on the sell side today. Then it's really no surprise when we come over and look at the sectors. We only had one sector in the green. That was energy, up 0.42. Now, energy being up is not good. Higher energy prices is going to lead to more inflation. More inflation will lead to the less chance of the Fed cutting rates and more strength in the dollar like we saw out here today. But notice how strong the dollar was, up 0.65%. Then we come over and look at the precious metal gold. Gold today was actually able to eke out a gain, just barely miss hitting our level that we had to the downside. Caution though, if you look at the MACD indicator, it looks like it's just getting ready to roll over and potentially go a little bit lower. Now, I thought this article was quite interesting. Could the Fed skip a rate cut next month? Because if we come over and look at the Fed watch tool, the market right now is still pricing in. There's an 85% chance that the Fed will cut rates in the next meeting and cut rates once again in December. But now it's changed substantially where they see rates holding steady for the next 3 meetings after that. Now, in terms of a rate cut decision, if you look at the data we had out today, final GDP numbers came out 3.8 versus 3.3. Weekly unemployment claims, 218,000 versus the forecast of 233. Core durable good orders, 0.4 versus negative 0.1. Durable good orders, 2.9 versus negative 0.3. So the data that we had out this morning was very good. Even the real estate data, existing home sales, 4.00 million, forecasted 3.96. Now, with all that good data, the market's really been running on a sugar high that the Fed is going to cut rates. But in Sunday's video, I told you guys, watch the 10-year yield. And where we're at now, we're right up to that resistance level. I'm going to draw a horizontal line right across the low here, and now look today, we wicked above it. If we start getting above that level and we see the 10-year yield continue to climb up higher, that is going to be even more problematic out here for the stock market. We come over and look at the fear and greed index. Today, we're actually back over in neutral territory, finally, after spending so much time over in the greedy territory. Then we look at the most recent investor sentiment survey. This week, we come in at 41.7, the exact same bullish reading that we had the week before. However, the bears did drop off a little bit from 42.4 to now 39.2. Now, when we come over, we look at the SPY real quick. We can see the SPY today hitting that 38% retracement. And now notice we have that MACD indicator just getting that bearish cross. And I warned you guys in this weekend's video, this week was a very bearish week for the market. Well, now today we produced quite the large gap to the downside, and we have a hammer-ish looking candle. I would prefer the body to be a little bit larger than what we have at this moment. On the 4-hour chart, MACD indicator still looks horrible at this moment. And we look down and we look left a little bit, notice right over here is from the FOMC day. We came right down today, basically testing out that level. Now, if we come down here again, watch out, because if we look, we can see other gaps that we have down below us, which still have not come back and been filled yet. But then as we look at the 30-minute chart, notice, and I want you guys to pay attention to this for tomorrow, because this is going to be very important. The MACD indicator did get a bullish cross, but if we cannot get any type of upward momentum tomorrow, this is going to be problematic, because if the MACD indicator drifts towards the zero line and we're still just hanging around in today's range, watch out. That could be nothing more than a recharge point for another leg lower in this market. And with the fact that we're only days away from a possible government shutdown, right here it says Democrats dig in on healthcare demands with government shutdown days away. And we already seen other articles talking about the White House is planning mass layoffs. Now, if all that wasn't enough, keep in mind, tomorrow we have some major economic news. The Fed doesn't think inflation will run amok again. The PCE price gauge will help clue us in on that. So tomorrow at 8:30 a.m., we want to pay very close attention to the core PCE price index. This is the Fed's preferred measure of inflation. Then at 10 o'clock, we get revised consumer sentiment, followed by revised inflation expectations. Now, if we come over and look at what the market's pricing in tomorrow, if the PCE comes in lower than 2.6, we can see stocks going up, dollar down, yields down. Just slightly lower, stocks up, dollar down yields down. But if we come in line higher or much higher, that's when we're going to see stocks under pressure and gold under pressure tomorrow. Let me know in the comment section down below. Do you guys think the PCE data will come in hot, or is it going to come in nice and cool for tomorrow? Take Profit Trader, where you can save 40% off all the evaluation accounts, 0 activation fee. Take advantage of this offer. Use code epitome at checkout. Now tomorrow, as we look at the volume profile, keep in mind we do have a gap above us. So if we really start getting above value area high, I then want to start to focus on that gap potentially being filled. But tomorrow I'm going to be paying close attention to the MACD indicator. I want to see, once we get back towards the 0 line, is the market substantially pushing away from this level? If not, that's going to spell trouble up ahead. Now we come over and we look at the futures markets real quick. Notice we come out here and the ES today was able to hit the 38% retracement. We also were able to take out last week's point of control, and we had a full volume profile rotation on the way down. Something we have not done yet though. If we turn our attention right here, 6605. This is an untested value area high from 2 weeks ago. And the rule behind that is within the next 1 to 2 weeks, we're going to come back and visit that level. Well, that has not occurred yet. Look at the range so far this week, 132 points. Last time we had a range higher than that was right here at the end of August. Now we come over and look at the daily profiles on the 30-minute chart. Notice a majority of the volume today was built out roughly in the middle of the range. This afternoon, we came back, we attacked the morning low, we wicked below it, boom, got right back above it. Now it's going to be critical. Can we get above this swing point right up in here, which is just above value area high at 66.73? If we can get above that, then my next target is going to be this structure breakdown point right up here at 66.82. In the event that we cannot get back above this, either this is going to turn into a consolidation, or we're building calls to break out below this lower price and below that price point. That's when I would then want to turn my attention back over here and see, can we come down and hit 66.05? Now we come over and look at the QQQs real quick on the daily chart. Notice today we were unable to hit the 38% retracement like we saw out there with the S&P 500. Notice the MACD indicator is almost giving us that bearish cross. We were able to close this gap right over here, but I'm still kind of fixated on this high volume node right around the 50% retracement, somewhere around 580.04. And we look at the 4-hour chart, we already have a bearish cross to the MACD indicator. We were already able to fill this gap here, but look left, we have another gap right over here. We have another gap down here, and we have a gap right up here. We have a lot of gaps that still need to come back and be filled. On the 30-minute chart, you can see today we're unable to fill that gap, and the MACD indicator does have a bullish cross, but I want to be cautious. If we just simply work our way back towards the 0 line and we're still consolidating down here near these lower prices, watch out, that could be nothing more than a recharge point for another leg lower in this market. Now, as we come over and look at the NASDAQ futures with the weekly profiles on the 4-hour chart, you can see we had quite the push down today. We came right back up, basically undoing that big down candle, came back down again, and now we're trying to work our way right back up. On the 4-hour chart with the weekly profiles, we are unable to take out value area high, and keep in mind, we still have that untested value area high from a few weeks back, 24,182. Will we be able to flush down towards that level potentially tomorrow? Keep in mind, we have a minus development down here where I think we're going to spend a little bit more time back and forth. Now, if we do continue to push on up, if the market gets a positive reaction to that news tomorrow, watch out for this high volume node at about 24,805. Now, as we come over, we start looking at the daily profiles right here on the 30-minute chart. Notice today, unlike the S&P, when we wicked on down, we did not take out the low, and we do have a point of control right below us at 24,410.5. But the same can be said if once we do put the bottom in and start rallying up, we do have an untested point of control above us, 24,948.5. Now, is this good enough for a double bottom or not? Well, if we're gonna have some upside testing, we need to be able to break above value area high. Now, in the event we break above value area high at 24,673 and we come back down, then I want to target the point of control. Then I want to target value area low. Then from that point, I want to go ahead and look for the market to come back, either retest this wick here or the candle bodies at about 24,459. Then I want to turn my attentions towards that point of control, 24,410. Anything below that, that's when I then want to turn my attention back down towards some of these lower targets. One could be this spike right here at about 24,247, but then right down here, towards that untested value area high at 24,182. Now, if you guys like to learn a simple order flow trading strategy that I use each day in the market, make sure to watch this next video right here.